Money FM 89.3, best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. We are looking at the Singapore markets today as we look forward to Budget 2025. And to help us out today, we've got Kelvin Wong. He is the Senior Market Analyst at OANDA. Good morning, Kelvin. How are you doing?
Very good. Good morning, Ryan, as well, and thank you for the invitation.
Hey, great to have you on because we've got a lot to talk about when it comes to Singapore stocks today. And let's start first with where we are right now for the STI, which is up in the latest session 0.7% to a new record high, 3,904 points. What's your overall takeaways from what we are seeing so far in the momentum behind the STI?
Yes, was particularly driven by technicals as well, given the breach of its new fresh 52-week high, and as well as supported by the major weightage component stocks in the STI, particularly DBS, which continues to surge after its positive guidance from its earnings. And now market participants are anticipating a similar rosy outlook from the two other heavyweight banks, which is also form a part of the major component weightage in the STI, which is UOB and OCBC, which is about to report their earnings pretty soon as well.
Yeah, it does sound like with the earnings coming through, UOB tomorrow and OCBC in the coming weeks, we might still see more upside for the STI.
What we could see over here is that given the current external factors, which is also playing a part as well, especially due to this trade tariff policy coming out from US. So apparently we have a kind of a overhang, hawkish trade tariff policy as anticipated earlier by market participants, but it didn't turn out as bad as expected. Given this status quo scenario, market participants will be reviewing or focusing more on this geopolitical situation surrounding Russia, Ukraine, and definitely the middleman, which is US. So things seems to be turning on more of the brighter sides towards Ukraine, and markets is looking for a potential kind of a breakthrough in peace talk negotiation between Ukraine and Russia. That's also boosting international sentiment towards risk assets, which is benefiting the Singapore market as well.
All right, so attracting some safe haven flows. Year to date, STI up 3%. On the 12-month basis, it's up 22%. And looking at some of the components in the STI, we also have REITs in the picture. What's your take on where things are going for the REITs space?
Yeah, sure. If you look at the REITs itself, I would say that if you look at based on 3-month rolling performance basis, they are still lagging behind the STI. So we talk about the ST REITs index, they're still down by negative 3%, whereas from a 3-month rolling perspective, the STI is up by 4%, which the outperformer is by the banks itself, average 5% plus. So what you could see about the REITs over here is that it's still pretty much of a lackluster, lagging underperformer, given the fact that several REITs has reported potential reduction in their DPU. So that's actually weighing the performance of the REITs right now. So what we could see over here is also linked to this global interest rate environment right now, which is there's still some uncertainty because there's still this increase in global costs, especially from these trade tariffs that could still play out in the later part of the year. So that actually kind of put a kind of a negative feedback loop into the REITs market in Singapore.
Yeah, part of dealing with the uncertainties on the horizon is Budget 2025, and this is where we're expecting plans to touch on a few key themes, including the cost of living, job security, skills upgrading, as well as SG60. What are you expecting on that front when it comes to potential impact on the Singapore stock market?
For sure. So if you look at, I believe that most of the market participants will be looking at stocks related to consumer spending, because our leadership has already addressed the impending higher cost of living that are driven by external factors. So there could be a potential more incentive to actually elevate this cost of living through individual tax rebates and as well as a top-up or further enhancement of this ongoing assurance package that's been given out to the respective income group in Singapore. And that could potentially see a bit of positive feedback look into consumer spending related stocks, especially the consumer stable sectors. That's one hand I'm looking at. And another thing over here is we're talking about another component would be this incentive to elevate or to further enhance digitalization and AI-driven, we call it cutting-edge capabilities that is still rather expensive right now in terms of operational costs. So the budget could potentially introduce some incentive for firms to actually adopt this digitalization model through, number one, is through from a corporate perspective, and secondly, will be through training of this AI knowledge through skills futures top-up. And that could potentially see some form of market attention towards various infrastructure SG-related stocks that deals with this digitalization and AI ambitions plan. Like, for example, potentially Capital DC would be one there, like Sabawang Industry as well. And on the hand, is it potentially there could be some further information due to this regarding about this Johor Singapore Special Economic Zone that could make an announcement during the budget as well. What are potential incentives coming up from Singapore to encourage firms to take advantage of this upcoming Johor Singapore Straits Special Economic Zone? So something to look out for that as well, especially for companies that has a foothold in Johor, and as well as that could potentially to logistic company as well, and potentially some of the hospitality business-oriented Singapore-listed stocks that could actually be on the radar as well.
Okay, so quite a broad range of potential catalysts for the Singapore stock market. And talk about trying to revive interest in the stock market. We've got a set of proposals tabled last week from the Monetary Authority of Singapore's Equities Market Review Group. So this involved measures around tax incentives. We will hear more in time to come. What are your impressions so far on how much this will do to help show up more interest in the local stock market?
Sure. I think what you could see over here is that the first set of, we call it teaser news, the teaser review outcome, it doesn't really bode well for market participants. So they actually sent the SGX stocks down by close to 5.8%. On last Friday. The key crux is not being addressed, which is to improve liquidity. Then thereafter, there could be better potential valuation for companies that list in SGX, because we also do not want just tax incentive to actually attract, we call it potential listing SGX, because that could also lead to lower quality firms that are being rejected by other overseas exchange. So what market participants wants to hear, hopefully, is the first step is to actually improve liquidity in the market. How do we do that? Is that I would like to see a reduction in the board lot size, because right now we are still looking at 100 shares, per lot. So perhaps some of the shares could be allowed as a kind of a experiment stage. Definitely, we talk about we need to actually show up our back-end infrastructure in terms for our brokerages to be like US, perhaps one lot to have one shares instead. So that will improve liquidity. And on the other hand, over here is that we could actually allow third-party, we call it third-party fund manager to kind of a given allocation of CPF monies to not only invest in our higher capitalization stocks, but more of a smaller capitalization or small cap stock as well. So that could potentially boost liquidity, but definitely we need to have a safeguard to have some form of, we call it annual review of this performance of this third-party fund manager. And on the other hand, is to also improve or I'll put it away that incentivize brokerage house to do more research other than the major component stocks in the STI, but also to actually the small cap stocks that are pretty much off the radar of the current research department in the local brokerages right now. But then if we have more incentive to do that, that potentially could gain more awareness on this, we call it not so prominent small cap stocks in the minds of the retail and institutional investors radar screen right now.
Yeah, quite a few areas to look at, and we are just looking at the first set of proposals. We will hear more in time to come on what else is on the table. And we've been in conversation with Kelvin Wong. He is the Senior Market Analyst for OANDA, helping us to break down the latest in the markets, including a record high for the Straits Index. Kelvin, thanks for your time and insights this morning.
My pleasure.
All right, catch up with you again soon, Kelvin. Save Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.